Hey everyone, welcome to Primary Market Chatter. This is our March 3rd week episode, and we are back after a long hiatus. Like it's after a month that we are doing a space. So just wanted to check to begin with if I'm audible. Just trying to make sure that the routine is set in. So if I'm audible, just give me a thumbs up, or if Tanmay and Rohit, you guys can let me know.
Yes, yes, very clearly
Yes,
audible.
I hope we are
Perfect.
audible.
Yes, you guys are. For
Perfect.
once, Twitter isn't glitching and everything's starting well. So maybe that's a good omen on on a note on which we need to start the space. But yeah, just wanted to thank everyone for tuning in, and just wanted to highlight that. We have been absent for the last 1 month, but that's majorly because not a lot of IPOs have hit in the last 1 month, which are of good quality or like even like decent size per se for us to evaluate. And the market has been going through a hiatus where IPOs end of the day are a bull market phenomena. So when the market goes through downturns, that's when you need to wait through that period and just make sure that you stay in tight and hang in there for another day. Having said that, as things have things turned, and it's anybody's guess at that moment of time, but we did see that there were a few good SMEs lined up for next week, which we were slightly excited about. So we thought we'll talk through those companies. So again, this is not a full-fledged back where we will do another space next week. It all depends on what is the quality of IPOs which comes in next week, and basis that take a decision month over month on how week over week on how we want to proceed. But yeah, having highlighted this, just wanted to also mention that like I always say, we are not SEBI registered research analysts. So please take your due diligence. Right now, IPOs, it's a good time to apply to IPOs because allocation is not a problem. So it's about your own uh, conviction. So definitely read through the companies. One thing which I would want to highlight, if you are not taking away anything from this space, is don't stop reading about companies, don't stop following the markets. It will always have peaks and troughs. There will be new people who will come in. There will be old people who will leave the markets. The idea is to stay sane and stay be in the market for the longest duration, and not make absolutely silly mistakes. As long as you can avoid absolutely silly mistakes, markets are rewarding. That's what my experience has been. But yeah, now that I've set up this, one more thing, our YouTube channel, which has been dormant for the last 1 month, we'll put this space there. So if you haven't joined our YouTube channel, definitely join the YouTube channel. Um, and if you have any questions during the chat, definitely post them as well. So what we'll be doing today, just setting up the agenda for the day. We will majorly be talking about four main companies, SMEs. So there are seven SMEs for next week, four of which we found pretty interesting. So we'll be majorly covering them. And these are, we'll probably start with Grand Continent, then do a very super high level review of rapid fleet and active infrastructure, and then move to Desco Infratech, Shri, Ahimsa Naturals, and ATC Energies. So that's going to be the flow for the day. We'll probably take an hour or 45 minutes of your time, review these companies, what we like about them, what we don't like about them. Having said that, just one general agenda. A lot of these companies, like we are not sure how much will they be subscribed. So if you are someone who likes to sell on day one and only apply when you're absolutely sure about of your chances or are not a risk taker, you can probably avoid even like these companies per se. But having said that, maybe we can now move forward and start talking about the first company, which is Grand Continent Hotels. We'll begin with that. So just setting up the company for Tanmay. Grand Continent Hotels is a hotel chain in India that caters to mid-market segment, operating 19 properties across six major cities and has 900 keys per se. And just in terms of the IPO details, the company is bringing up its IPO, SME IPO, which is of 75 CR, approximately 75 CR, out of which 71 CR is a fresh issue and 4 CR is a OFS. So majorly fresh issue. In terms of market cap, it's coming at like 281 CR market cap. And in terms of the financials, So 281 CR, so like 25% dilution, the minimum required percent. In terms of financials, it has done a revenue of 31 CR and a PAT of 4 CR. So uh, in FY24, which has further increased in first half of H1 of FY25, we'll talk about that. But since I always say FY24 financials, I've been consistent in just putting uh, the the FY24 PAT, which is 4. So on that metric, if you just look at FY24 P, it's super expensive. But more to come in terms of what is its acquisition pipeline like, what is it planning to do IPO. Maybe Tanmay, you can cover all of those when you do. In terms of the LM is Indo-Orient Financial. This is the same guy who bought Yash, high voltage, and then EMA partners. So decent repute in the market. With that, maybe Tanmay, do you want to go ahead and cover Grand Continental?
Is my voice audible?
Yes.
So Grand Continental Hotels Limited is a Tamil Nadu-based hotel chain, okay, which operates 19 properties across 8 cities. So its hotels are divided into 3 categories, okay. One is the upper mid, whose price range, like ARR, average revenue per room is like 3,750 rupees to 5,000 rupees. The second one is the mid-priced hotels, whose segment is like 3,000 to 3,750, and the third one is economy. In the economy, it has started its first hotel very recently in Bangalore. Out of its 19 properties, 16 are in the lease models, okay, like franchisee agreements with partners like Sarovar Hotels and your listed Royal Orchid Hotels. In the upper mid, first I'll give you the breakup of the 16 lease models. Okay, 4 are in the upper mid, 11 are in the mid price, and 1 is the in the economy. Okay, see, the company has a current at a high level has a asset light model. Okay, so in the asset light model, it has 755 keys. What light model means is the property is owned by some other large group, and the property is leased or the franchise agreement is done by Grand Continental Hotels, and Grand Continental pays a certain percentage of the gross revenue to the partner to the hotel owner. Okay, and they have the trademark and license agreements and the franchise agreements of that property. Okay, so it has 10 properties in Bangalore, and rest properties are in Hosur, Sikandrabad, Tirupati, Chengalpattu, Rangareddy, Goa, and Mysore. Okay, the company is raising 74.5 crores, out of which 70.4 crores is a fresh issue. In the fresh issue, the company will be repaying its debt by at a tune of 34.1 crore. Okay, the company currently has 40 crore gross debt in its books, out of which it will be repaying 34.1 crore. 19.3 crore has been kept, 16.8 crore has been kept for the expansion for new properties. Now, what does this mean? The company is going to open 5 new properties. 2 will be in Chennai, 1 in Kanchipuram, 1 in Hyderabad, and 1 in Goa. Okay, so total 5 properties. MOUs for all the 5 has been signed, and all 5 combined will have 346 keys. Okay, and post the acquisition of new hotels, the company will have like 12 and 1250 keys. Okay, post getting all this 5 on board, and the rest 19.3 crore will be GCP, general corporate purposes, and there is a cute small 3.7 crore OFS. I'll come on its financials. In FY23, the company did a top line of 16.8 crores, okay, which was 183% rise on FY22. This was due to your pent-up demand after the COVID. Okay, EBITDA margin was close to 37%, and PAT was like barely 1 crore, 1.1 crores. In FY24, the revenue rose to 31.5 crores. It was a 85% revenue growth. EBITDA margin had dropped from 37% to 31.6%, and PAT was like 4.1 crores. Okay, and in H1, the company did a revenue of 31.8 crores, which was like approx 1% higher than the whole FY24 revenue in the H1 itself. Okay, the EBITDA margin was close to 35.3%, and PAT was like 6.8 crores. Okay, and one good thing to notice, there all the properties at combined level. Now see, this data point what I'm giving you is based on the H1 numbers. Okay, like the company had 16 properties till the September, and then the company had added 3. So when I'm telling you some of the data points, it is based on those 16 properties and not on the 19, because after September, the company hasn't reported the 3 months numbers and the data. Okay. So the company is operating at 90% occupancy, which is very, very great in the industry. Like in this industry, we see like 70% kind of an occupancy at an average level, but the company is doing at 90%, which is very, very phenomenal. Okay. And if you just extrapolate the numbers, because H1 is approx like your 40% averagely for the hotel industry, H1 revenue is 40%, and the H2 is 60%. If I just extrapolate these numbers and get the FY25 numbers, the revenue should be like close to 75 to 80 crores, okay, which should be a very, very big jump than the FY24, okay. And the PAT should make 15-16 crores, considering the margins are very flat, okay. Margins are something to 19% PAT margin, okay. I know the PAT margin in H2 will be a bit on higher side, but we have taken at the conservative number. If I come on the market cap, it's IPO is priced at like 281.6 crore market cap, and if I just get it on the PE side, on FY25, it's priced at 18 times, okay. And at EV/EBITDA, which is the what we can say the prime metric to compare an hotel a company in the hospitality segment, so it's at 12 times EV/EBITDA, okay. 12 times in the listed space, actually it will be the cheapest hospitality stocks among the listed ones. In the listed, there are like 2-3 companies which are in the similar model. The best one is to compare is the Lemon Tree Hotels, okay, which is also in the similar segment, like asset light model, and majority the rest peers like are the owners of the properties, okay. Or SME can be, but there is a blend of it. But majorly you can compare this company with Lemon Tree, but Lemon Tree is such a large company. So if we check out the what you can say average EBITDA multiples of the listed companies, even in these from the small cap to the large cap segment, so they range between like 20 times to 35 times, okay, EBITDA. And the IPO is priced at 12 times, which is really, really reasonable. And even on the PE, it's at 18 times, and this segment rates at like 35 to 100 kind of a multiple. Because what happens in the depreciation cost, and few companies got recently listed, so their debts were very high, because COVID mein, the hospitality segment had taken a hit, and for running those property they had to take the high cost debts, okay. So that borrowing costs were killing the margins of these companies, and like many companies have done IPOs recently, so from those funds they got the debt down, but it's effectively visible from next financial year, like FY26. So to compare this segment on P is not very ideal. So you have to look at EBITDA. Okay. And on the valuation part, it is priced at very, very, what we can say, reasonable valuations. The company also saw a pre-IPO round in which the participation of investors include Nijen Discovered Fund, Ajay Singhani, who is the promoter of Polycab. Okay. The third major pre-IPO was Mittal Analytics, which are the owner of Screener.in. Okay, I guess it is their first pre-IPO as per my knowledge, and there are some few more names. The IPO is getting concluded at close to 30-33% premium to the pre-IPO price. And if I just look at their round and the pre-IPO round, like almost at par hi ho raha hai. Okay, pre-IPO, the IPO is happening at almost the par, because when you see the new equity raise, the dilution of the earlier investors happen. So if you know the pre-money, post-money concept, like IPO is priced at the same price only almost. Okay. So overall, and the LM also is quite reputed. I guess its first IPO was eMudra in the main board, which did extremely well. And you saw two recently listed SMEs from the same LM, which was your Yash High Voltage and EMA Partners. Okay. So what I feel is the company is very, very good. The promoters, Mr. Siva Krishnan, has also very good experience, and there are no major litigations or cases against the company, and the scale of operations were what we can say, it was a very, very small company till the last financial year, but now this year they should clock close to 75 crore, 80 crore top line, and like almost like 16 crore bottom line. So now this is not a small company from this financial year, so the scale of operations is also quite decent. Valuations are very, very reasonable. I didn't felt that it's priced at an expensive, like just think 900, they are already operating the keys 905 something. and they will be adding close to 350. So after this 1250 keys entity, you are getting at like roughly 280 crore market cap, which is very, very cheap. Okay. So what I feel, uh, I'm not sure regarding the listing gains, because from the COVID, I would say 2019 only, this hospitality segment, the hotels or the related segment hasn't done very well at the listing gain, but after the listing they get pick up. So what I feel is, to apply or not is a subjective thing. I feel it won't list in discount as per me. I feel it will get listed at a decent premium. Then we can see some like sideways, and then we can see the company getting what multiples it deserves. Okay, so I feel इसको ठंडा करके खाना चाहिए. Don't go into FOMO and buy on day one, or don't go very aggressive. But I feel that the IPO is priced at very, very attractive valuations, and it should do well in coming days. The anchor book was, I would say, decent considering the market situations. When the anchor book was done, it saw participation from your Nijen, Niveshai, and YR Investments, Vikasa. So it was a decentish anchor book, but great considering the market sentiments a week back. So if someone has a horizon to hold it for like 3 to 6 months, as you know, H2 results will be are surely going to be good in this segment. So it can be kept in your portfolio. I feel the company is very, very decentish. But for absolutely for the listing gains, I'm not very sure. But I personally don't feel it will open in the negative territory.
Thanks, Tanmay. Couple of things. Listing gains to be काफी difficult है यार for anything to predict, because again market's going through that you can't do much. Second, when you were talking about EV EBITDA, I remember someone told me EV EBITDA is a bull market multiple. When markets fall, everyone comes back to PE, and forward PE भी नहीं देखता, फिर सब पीछे का PE देखते हैं कि भाई मुझे मत बताओ forward PE. Tell me what is the TTM भी मत बताओ. FY24 PE बताओ कि तब कितने में मिल रही है. But having said that, I read the company. Couple of things which I like about the company, just the asset light model. Plus उनके पास जो sales and marketing में expense है वो भी कम है, क्योंकि कंपनी ने 2-3 चेन्स के साथ टाई अप कर रखा है. रेजेंटा इन हो गया, सरोवर हो गया. So they majorly do the sales and marketing for them, versus these guys who are majorly the operational excellence people, and they run the hotel day in and day out. I heard an interview. I think one interview is definitely available online, which I heard. The guy seemed passionate enough in terms of understanding the story. But more than that, I feel this segment in itself is going through a huge revamp, because there's a lot of demand, pent up demand in the market for, let's say, more than the corporate travel, for leisure travel and for religious travel, which these guys are getting into. So this is a smart segment to be in, I believe, because these guys will grow fast. Like उनकी 5 properties already हैं जो वो lease पे like either term sheet signed है या LOI signed है, तो वो उनको मिल जाएंगी, which will increase their keys from like 750 to 900. And I think, if I'm not wrong, they had said somewhere that they want to become like have 1500 keys probably a year and a half down the line. So should grow with that, and it's a good company to kind of grow with. Valuation subjective. I think it is decent, but market has proved me wrong multiple times. So let's see how it does. That is my very high level review. Rohit, Tanmay, Rohit, do you guys, Tanmay, before I go to Rohit, do you have anything to add, or Rohit, you can pitch in your point on Grand Continent?
Yeah, I'll add a couple of uh, small points. I also like this company quite a lot. It's reminding me a little bit of Chandan Healthcare that came recently, and I'll explain why. So the two main things I'll add, which you guys have touched upon in some way or the other, is one is the promoter is very, very strong. He's been in the hotel business for 20 plus years. Before this, he was the CEO of some regional hotel chain. I'm forgetting the name of it, but he basically knows what he's doing. The second is what you were talking about, Manish, about the aggressive growth. There is actually a paragraph in the RHP where they say that they want to take it to 2,000 keys in FY26 itself. I don't know how realistic that is to go from 900 keys now to 2,000. I know they have 350 keys that they have got the MOU, and that's on the verge of closing. But clearly, the vision is very, very strong. And I've also heard from some folks that the target is to get to 5,000 keys in 5 years. Leave aside the whether that will happen, but at least the management is ambitious. So if people want to back such management and hold this for some time, you know that they're targeting for explosive growth, the kind of growth that you'll honestly only get in an SME company. You will not get this kind of growth usually in main boards. I could also sense that ambition in the interview that's there online. As Tanmay said, the anchor book, at least in my view, is actually very, very good. To have Negen, Nivesha, India Max, like all of these, and they make up 75% of the anchor book, which means that this is not money that should come desperate to sell on the 30th day and the 90th day. This is long-term money. So that is also very good to see. And on valuation basis, like Tanmay was saying, this is very, very cheap for the sector. Now, this is the doubt that you have. This is an SME company. Will it get treated like most SME companies that end up trading at 15 times if people are not sure? Or will it get traded like the main boards of the segment, which is at like 30 times, 40 times, or an EV/EBITDA times 15 to 20 times at least? It's a little bit like that Chandan Healthcare, which is the only listed diagnostic play in SME. It was coming at very cheap. It actually held its own very, very well, even when the market was down. And it is actually up another 20% now, 20 odd percent from its IPO price. So despite being a very large issue, 100 crore plus. So I feel this has a lot of those characteristics, bit of an EV/EBITDA kind of multiple, unusual business in this SME segment. There are not too many in this space. Whether it's EV/EBITDA or PE basis, I think if you have a slightly medium-termish view, I don't think you'll be disappointed if the company delivers, because if they are able to double their keys next year, then you are getting an incredibly cheap asset at an amazing price, at least at an IPO price. No one knows about IPO pop, but to me, the business ticked all the boxes. So I am personally going to apply for decent allocation, but not with a view to flip on this thing, because that is anyway not a game anymore. But I like this company. So I will apply to get allotment from an investment standpoint.
Got it. Tanmay, do you have something to add?
No, sir. Actually, I had a small. I would not. That would add much into the value, but I want to tell you the dynamics of this segment a year back. We as valuation judges, we say कि P इतना होना चाहिए, EV बड्डा इतना होना चाहिए. Okay. A year back when there were like I would say 3-4 listings in the similar segment, when you saw Juniper, you saw Park Hotels, you saw this one more. There was a one more decentish IPO in it. So how did the top level guys used to value these companies? They were majorly into your upper mid scale, okay, like 6,000, 8,000 kind of a segment. कि यार 2,000 कीज है, इसको 3.5 का मल्टीपल दे दो, 6,500 फेयर वैल्यू, 7,000 फेयर वैल्यू है. To the keys, okay, I'm multiplying. The keys used to be like multiplied by 3.5 times to get the market cap. I know now this is not into upper mid segment. You give it a 50% discount. You just see at what value you are getting it, and the growth is tremendously good. Last year it was like 82%. This year, worst ever case, they will be growing at 120%. Worst case, like that is the base case. मतलब इससे बुरा नहीं हो सकता, तो फिर भी दे आर ग्रोइंग एट 120%. नेक्स्ट ईयर का 40-50% ग्रोथ क्लियर विजिबिलिटी है. ओके, सो मतलब आई एम एक्चुअली आई फेल्ट कि द बैंकर वुड हैव गॉट दिस कंपनी इन द मेन बोर्ड. लाइक SME guys don't deserve this kind of companies. Okay, they want those companies where like you need some fundraisers every like 6 months. You need some what you can say, थोड़ा सा हाथ पैर मारने पड़ेंगे, फिर जाके नंबर्स आएंगे. So such companies are not what you can say very prone to the SME segment. But if this segment as a whole finds value in it, this can be a good company to touch upon. So this is what I feel.
Couple of questions from my end, which I have in the chat box. EBITDA 31%, how sustainable is it? How different is it from the peers? Where do peers kind of operate at? If you could answer that.
So first of all, the majority peers, what you see in this segment are the asset owners. Okay, asset owners do a EBITDA margin of 30 to 50%. Okay, 30 to 40% to be, I would say, majorly, but there are a few exceptional cases where the margin is 40 to 50%, and above 50% there is only one player, which is your Vente Hospitality. Okay, But in this particular asset light model, the margins are very, very scalable because you don't have much to invest. Like you give a one time fee to the hotel owner. Like what I saw in the prospectus is like which 5 properties the Grand Continental Hotels is going to add. Like the fee is between 2 to 2.5 crore per property. Like जो 50-60 rooms की property वहाँ पे 2 crore है, and जो 60-70 है वहाँ पे 2.4-2.3 crores के आसपास है, 2.5 भी I guess नहीं है. So the capital employment is not that, and the cash flow you generate from that is very, very decent. बिकॉज आपको पेपर पे सिर्फ 6 करोड़ का पैड दिख रहा है, बट रियलिटी में वो थोड़ा सा ज्यादा के साइड पे है. एंड लाइक दिस ईयर दे शुड लाइक इनका कैश फ्लो ही क्लोज टू 15 करोड़ होना चाहिए करंट फाइनेंशियल ईयर ओनली फॉर 25 आई एम सेइंग, नॉट द नेक्स्ट फाइनेंशियल ईयर. सो द रेशियोज आर बाउंड टू बी वेरी, वेरी ग्रेट एंड द मार्जिन्स आर वेरी सस्टेनेबल. एंड H2 में और ज्यादा अच्छे होते हैं. लाइक अभी ये अगर 35% H1 में है तो वो आपका H2 में वर्स्ट केस इट शुड बी 38-39%. तो at when we extrapolate the numbers like 37, 38, 36.5%, तो बहुत ज्यादा sustainable है. So I don't see any now there can be one thing here is कि currently they have opened only one hotel in the economy segment which is your 3000 and below. अगर उसमें इन्होंने कुछ expansion जो new hotels are, those are into your the mid market and upper mid market segment only. Okay, they are not in economy, but if the company plans more expansion in the economy segment, yes, margins will be 200 to 400 basis point, मतलब 2 से 4% नीचे ही होंगे, which is very, very reasonable expectation. So I personally feel in majority cases the margins are very, very sustainable, and we can even see growth from here, which is what I feel.
So a couple of pointers here before I go to my next question, which is what are the risks involved. Before I just want to explain, like understand also from my understanding what's the business model. The business model is very simple कि कोई प्रॉपर्टी को ये लीज पे लेते हैं, सो उसका जो रेंट है वो इनको पे करना है, और उसके बदले में ये फिर उसको ऑक्यूपेंसी पे चढ़ाते हैं. मोस्ट ऑफ द ऑक्यूपेंसी कम्स फ्रॉम योर पार्टनर्स जो डू द सेल्स एंड मार्केटिंग, like Sarovas of the world, Regenta Inns of the world. But then you need to have a 70% approximate. I think there was a number 60%, 70%. I'm forgetting occupancy number, which you need to hit in order to break even. So one thing which you said that kinko cash nahi chahiye hoga, probably if they continue to have these properties, keep leasing these properties, they'll have to keep paying security deposits, which they will have to raise cash from somewhere. I'm assuming will internal accruals be enough? I'm not sure, but having said that, that's a good problem to have कि अगर company और keys add कर पा रही है, and जो current current set of hotels है उनको break even कर पा रही है, to be able to get that cash at the end. So one major risk which I feel is the risk of like जो newer properties हैं, it's all because it all end of the day comes to what places are you opening these hotels are at. Like, do you think will they have that occupancy rate कि तुम break even कर लोगे, उसमें से profit कमा पाओगे? So at that moment of time, you're just trusting the management कि they know what they're doing. But that's one tangible risk which I feel. Any other risk which you guys want to add to the business? I'm assuming that's a no.
Yeah. I mean, hotels is mostly execution. And if there are some structural economic down cycles, COVID obviously was an extreme version, but if there's generally a economic down cycle, business travel is down, those kind of things will affect the hotel business. But again, if you look at
will it affect this company? Because ये mid market में, right? So corporate होगा वो बोलेगा कि चलो सस्ते होटल में रह लो, which again helps this.
it will like shift down. It will shift down. I agree, but there will be a certain reduction in travel itself, which will affect everybody because these guys also operate at very high occupancy rates. Like I mean, some of their good hotels, like Tanmay saying, are at 90%, 92% and all. And of course, you'll have new hotels which will not be at that occupancy. But that is the biggest risk in the hotel business: the cyclicity of demand. Otherwise, if you are able to, and of course, there is that risk of you are trusting that the management will pick the right hotel in the right location, in the right geo, refurbish it correctly at the best cost, in the right time, etc. So that's all execution oriented. But that's where you trust these guys. You say, okay, so far they have delivered every hotel they have gotten to, they've been able to improve its occupancy to a certain level. They will continue to do that going forward. But that's an execution risk. And that's what all of us as investors will anyway be grappling with any company that we invest in. The story is good. It's about how the company executes. But yeah, to me, there isn't any very structural risk otherwise that suddenly hotels will, like say some other brand will come and eat all of it and so on. I think they have survived through a lot of these cycles, and they seem to be doing really, really well.
Got it. So what's the plan, boys? Are you guys applying? I'll apply. I had applied very heavily in Chandan as well, if you remember. So I'll apply for this one as well and then see. But
Yeah,
yeah,
I
maybe we'll
will
hold it
apply.
for clarity.
I will definitely apply, but it will be an amount that I'm willing to hold. It is not, I'm not expecting to gain anything from flipping. It will be something that we will apply and I'll keep for some time. Definitely to FY25 results, because after that it will look very cheap. Then if they continue, this is the kind of company that will keep posting a notification every month saying I've opened one more hotel, one more hotel. The kind of thing that in a bull market, SME Janta like. So let's see how it goes from there. But yeah, I think if they achieve as per their ambition, this company is very cheap even at IPO price.
Got it. Maybe with that, in the interest of time, we'll move forward. The next two companies which are closing, I think tomorrow itself, are Rapid Fleet Management, which seemed like another logistics and road transportation services company, majorly catering to both B2B and B2C clients with both FTL, full truckload, part truckload, and EXIM services, import export services. Like at a very high level, didn't find much interesting in the company, and it's coming at like 15 PE, which is decent. But if you look at like the market in itself gets like 15 PE. So wasn't very super excited about this company. Not going to cover in huge detail. Greatex is the LM. So again, not much to be said. Then the second company which is closing is Active Infrastructures, which is a civil construction company. So again, infra EPC sort of a player, and very expensive for the kind of uh, PAT numbers that it has. The company is definitely asking for a lot. It's a 77 CR IPO with 10 crore PAT in FY24 and 5 in FY25 first half. New LM Creo Capital. Anchor portion was also very small, like 10%. So didn't find it much interesting. So not a lot to cover on that front as well. Maybe we'll skip in the interest of time active infrastructures as well and just move forward to the next company, which is Desco Infratech. So just setting up Desco Infratech for Rohit. It's a infrastructure company focused on engineering, planning, and construction, particularly in city gas distribution and renewable energy and power, etc. Just setting up the IPO, it's a 31 crore IPO, all of which is a fresh issue at a market cap of 115 crores. So they're diluting like bare minimum 26%. In terms of the FY24 financials, they did 30 crore of top line and 3.5 crores of bottom line. So if you just look at FY24 numbers again, because we are already at the end of FY25, it's kind of injustice to look numbers at FY24, but still, since we have been following this pattern, it's coming at like 30, 35 PE. FY24. Maybe Rohit, you can talk about more about FY25 numbers, and then the LM is Smart Horizon. So maybe before I hand it over to Rohit, I know that you had also interviewed with you had spoken with the promoters, and we will also be posting a management interview with Desco Infratech probably tomorrow, hopefully tomorrow if we are able to edit it today. So do be on the lookout for that. But before that, Rohit, if you could just go ahead and post your understanding of, like, share your understanding of Desco Infratech.
Sure, Manish. So I'll get started with Desco. So they're raising around 30 crore or so. This is an infra EPC company focused on the gas pipeline EPC segment. This is basically, you have two sub segments within the gas pipeline EPC segment. You have the intra-city EPC and you have the cross-country pipeline EPC. These guys are focused on the city gas, which is the within a city, intra-city gas pipeline lane. This is the piped gas that you might get in your homes, the piped gas that industries use, but it is laying that infra for it. And at a macro level, I think today 6% of the country is considered to be covered by this kind of pipeline infrastructure. But that means that basically 95% or 94% is still to go. And there's been a target set by the government a little while ago saying that the goal is to get it to 15% in the next 5 years, which is almost 2.5 times. So there is a structural tailwind or a structural growth that the industry itself will get because the government itself wants to get this sort of gas into people's homes and into industry, because there's a much safer way for gas to be transmitted. And EPC players like a Desco are essential to help both your large private players, your Adani Gas, your Torrent Gas, as well as your PSUs like a GAIL and so on, who will be getting these orders from, say, the National Gas Board, and they will subcontract the pipeline link to EPC companies like a Desco. This company is led by the Desai family. They've been in business for 30 plus years. But what is interesting is the second generation have entered this business in the last 5 to 10 years. I mean, the brothers have come in at different times to help professionalize and push this biz. As Manish said, we interviewed the promoters. In fact, I interviewed them just yesterday. We will be posting about it tomorrow. But just my quick read over there is I found this promoter family to be a very, it feels like a very honest family business, which has a lot of ambition, which wants to do things, for nation building. So do check it out and form your opinion as well on the company and the promoters. But I think that's something at least I got a lot of comfort as I conducted that interview. Today, Desco has an order book of 245 crore or so. Most of it is unexecuted. It's also fairly well diversified. About half is from private sector and little more than half is from the public sector. And they're also quite diversified across states. So about 40% of their business is from Gujarat, but they are still working across 7-8 different states, Haryana, UP, Tamil Nadu. So they are quite, it's not like they're single, although there is a concentration in one state, Gujarat, that's generally considered to be the best state to be concentrated in. But there is also, diversification to other states, and they're continuing to sort of bid for tenders outside of the states they are in. Overall, as Manish said, their numbers are, like if you look at it till FY24, you will think this company is coming expensive, but I'll try to lay that out. So FY23 to 24, their top line was more or less flat at around 30 crore. But they improved their margins quite a bit, and they did 11-12% net margin in FY24. In H1, they've done about 75% of what they did in full year last year, with a much higher margin of almost a 15% net margin. They've also given some indication on what their sort of mix looks like for the year. And generally, about half their business, half their revenue gets recognized in Q4 alone, which is just to do with how things are billed and when the orders are won and so on and so forth. And so it's quite likely that they will do around 60-65 crore with at least the same PAT. And that was the comfort I got from that interview, which means when I say PAT, same PAT margin, they should be doing around 9.5 crore PAT for this year, which means that this company is coming at around 12 times FY25. And their plan for next year is to grow by at least another 100%. They have the working capital with the IPO funds, and they have the order book. So you can say that this company is coming at 12 times FY25 and maybe 6 times FY26 at a somewhat conservative level. It could be even less than that. It could be like 5.5 times. This company, if you look at it, there are 2 peers that you will see, 3 if I include a Pratham also. But you have Likhita, which is in the mainboard segment, which trades at around 15 times FY25, but is not growing as fast. You have Rudra Gas, which for some reason trades at just 10 times FY25 or 9 times FY25, which I don't know why. I really don't know why Rudra trades at the price it does. And Pratham, which recently raised money from Mr. Ashish Kacholia, that trades at, I think, 17-18 times FY25. That is more into cross-country pipeline. Now, if you just look at it objectively at an absolute level, I think most of us would be okay to pay 12 times FY25 and 6 times FY26 for a business that has good visibility, where funds will be a clear unlock, for growth, where most of these companies, they have an order book, then it's all about execution. And the moment they have working capital, they will be able to deliver numbers because there isn't really any other risk. It's not like they have to now go and win orders to do the, 140, 150 crore that they want to do next year. So in my view, the valuations are forget, if you leave aside Rudra Gas, the valuations are completely reasonable. Very good pre-IPO investors, many, people we know, quite a few Twitter personalities are there. But probably the most interesting name for me was Dr. Farooq Patel from KP Group. Generally, what he touches turns to gold. Probably the best example is Bondada, which somehow trades at a different multiple compared to the rest of the EPC pack. So I think I am reasonably confident that if you take all of these things together, this company should do well if you have the patience to hold it even for a month and a half for the FY25 results. I doubt you will exit at a discount. You should exit at a good premium because worst case, you're getting this at 12 times FY25. For me, the only one thing was the anchor book perhaps was not as good as I thought it would be. They just looked like the kind of funds that would not hold on. So maybe that was the only tiny little red flag. I thought they would be able to get a better anchor book, but let's put that down to just the sentiment not being that great. But again, this is a company that after a while I am actually going to apply reasonably strongly in this company, and I have no qualms with holding this for at least 1.5 to 2 months. And if the company does deliver really good numbers in FY25, and it looks like they're going to double their turnover and bottom line in FY26, I will probably just hold it, till that at least, and then see how the company executes beyond that. So again, this feels like a good one to keep for some time, at least for some time, and then take it as it goes. So overall, I'm positive on this company.
Got it. Again, just want to highlight again, depends on how markets kind of evolve over the next few days when listing is happening. Probably if you are if you're just buying for flipping, it will be risky. For longish term, I am reasonably positive on the company because again, there are a lot of people involved and having heard the promoter interview, it just seemed like a person you would want to take a bet on. One question for you, Rohit here, regarding Rudra. Do you know what is their current growth and what growth did they project when they came for an IPO? Because I'm asking this because there will always be execution risk. Like irrespective of which EPC player you pick, if you're picking a EPC player, you're betting on a EPC player, you will have execution risk, right? So, we can say 6 FP FY26, but that's assuming baking in that the execution goes as it is planned. So I want to compare if Rudra, and also second question is Rudra also in intercity, within city only, and if is there huge difference between the two? Is one easier than the two per se, or any structural difference that you feel?
Yeah, Rudra is in the same business. They are also in city gas, so they also do intra-city only. Rudra, I don't know the exact guidance, as in I'm not sure if they had given a specific guidance. Their numbers in September were decent only. And anyway, this business, like I said, is such that their queue, it'll be heavily skewed towards the end. There is some difference in the geographic concentration between where Rudra is predominantly present and where these guys are present. So I don't know if that has something to do with, because you've seen in, say, power transmission, a Gujarat-based company will get a much higher multiple than, say, a Rajasthan-based company, just because of the two governments, right? So maybe that has something to play with Rudra doing poorly. But yeah, I don't want to, if you look at what a Pratham does, which is cross country, that is actually a more challenging business because you have to deal with multiple states. It is also actually, in my view, harder to execute business and riskier to give a higher multiple because there's a lot of right of use, that land issue that keeps popping up. Whereas if you're getting something within a state, it's a lot easier to get whatever rights needed to actually execute your pipeline projects. Whereas intra-state or interstate, that is harder. So things can get delayed a lot, which is why I feel this is a better one from a just cash and outcome standpoint. So I feel Likhita is a good example. I think majority of they do also do some cross country, but majority is intra-city, and that is, and it trades at 15, 16 times without the same growth. One thing with Rudra, as a point, which is the counter to what I'm saying, they also had a phenomenal order book. They had, I think, 350 crore or something, 300 something crores, what I remember. I don't remember perfectly. And some of it was executed, but still majority unexecuted. And business scale is not too different. Probably were doing 35 crore, maybe 50, 60 crore, in top line. So Rudra is a unusual case. Their margins are also a lot worse than what these guys do, what Desco does. whereas Desco's margin is more comparable to Likhita. So I feel something, I don't know what is wrong with Rudra. That's why I'm hoping that, there are multiple examples now, companies where the cheaper company will stay cheaper. We've had that problem now with many of our portfolio also. I'm hoping that in this case, you catch the one which is slightly more expensive, but it also has the right reasons why it is a little more expensive. It also has the right backing. And so it will trade at a premium to its peer.
Have we ever caught a company which trades expensive, talk about
I'm going to try
transformers,
this time.
talk about solar EPC? We are always with the company value trap. We find it cheap, so we
Yes.
buy more. And it keeps
That
falling.
that is my learning for FY25, and I'm going to try and change it with Desco and see if something happens.
Yeah, that's a good idea. So, with that, maybe we can move forward to the next company. This is a good company. Again, you kind of highlighted it well. I also thought that Enka book could have been better, which was one tangible risk, and again, one second tangible risk in this, which is a bigger risk than Grand Continent, is the execution because it is not unusual for projects in EPC to get delayed. It is not unusual for projects in EPC to be not non-profitable compared to, so cannot invest just on the basis of order book per se, but yeah, those are challenges which are across the segment. This company I kind of liked. This also has, for the lack of a better word, some more glamour going for it. Like, this is a very hotly tracked company, so I kind of like it because of that as well. But yeah, with that, maybe we'll wrap up in the next 10 minutes and talk about two more companies which we kind of wanted to discuss. Third one is ATC Energy Systems. The company produces and supplies efficient, low-cost lithium and lithium-ion batteries, offering integrated energy storage solution for industries like banking, automobiles, and other end users. Just setting up the IPO, it's a 63 crore IPO, out of which 51 crores is a fresh issue, so 12 crores of OFS. It's coming at like 240 crores of market cap. In terms of the FY24 financials, they did 51 crores of uh, top line and 10 crores of bottom line. So coming at like 24p FY24. I didn't think there was a lot of growth in the business in H1 at least. If and again, I'm simply extrapolating H1 into H2, H1 into plus H1 and H2 to be equal when I say that statement. Maybe Rohit, you can put more uh, emphasis on that. And the LM is again Indo-Orient Grand Continent LM. So over to you, Rohit, to speak about ATC.
Sure, I'll keep this one quick. So this is a battery assembler. They do it across sizes. We saw two recent battery assembling slash manufacturing IPOs recently. One was Maxvolt, one was CLN, and both actually surprised. Both came a little expensive, and both have done well in that they're holding that expensive issue price. CLN actually did very well after listing, before again coming down when the market went down. So all these guys do is they import cells and they assemble it based on the customer requirement. There is some technical know-how required for this, so there's not like any mom and pop can do this, but there are a lot of these battery assemblers now, listed, unlisted, in the market. This is largely a B2B business. These guys mostly do very small batteries. Majority of the volume is batteries that would go into small electronic applications. So apart from mobile phones, things like, say, POS machines, ATM machines, inverters, drones, which was some order that they won recently. They also do a small amount of EVs and two-wheelers, three-wheelers. But like if you see this year in H1, it's hardly 1% of their business. The market itself is a good market as a whole because there is a natural shift from these lead acid batteries, which are considered to be polluting, to lithium ion batteries. These lithium ion batteries also have a much longer life. And the costs of lithium ion are coming down very sharply. So this I remember when I was looking at CLN Energies, there was some Nomura presentation or something saying that this battery space is expected to grow at 65% for like the next 5-6 years. So there's definitely a big tailwind or market tailwind here. But I found their numbers to be fairly weak. Last year they did 50 crore, and it's a little bit all over the place. So last year they did do 50 crore in top line, but this year they have done only around 20 crore. And there is one interview online so far, and I think on Monday, as tomorrow, there is one more interview. So maybe we'll get some more information there. But I got the feeling that they do a lot of different kinds of orders. There's no, like, the two companies that come before this were very focused, say heavily focused on EVs, and EVs supposed to be the fastest growing in the largest segment in this space. And they're focused and they have clients that give them repeat orders. Whereas here I felt like there's a lot of small orders that they keep taking from different places, very opportunistic kind of business, dealing with many different industries. So it doesn't feel like they've picked one and gone deep, and a little more opportunistic. And that may be the reason why the numbers are a little less fixed. And I also found that their balance sheet was pretty weak. There's a huge amount stuck in inventory, almost like 1 year of inventory, which compared to peers is like completely out of whack. Like CLN has hardly 40-50 days of inventory, while these guys have 380 days of inventory or something. So there's something different in this business that didn't give me the same comfort, where I remember actually saying that I found CLN to be a really interesting, good business, just valuations were a little high. So this company is coming at around 21 times on a trailing basis. CLN and Maxwell both are trading at that 26, 27 times, but I think both had very high growth visible, a very decent growth visible. And so both were actually coming in around 18, 20 times FY25, which is what my sense is ATC Energies is also coming at. There was an interview. In that interview, he says that what they did last year, they should just about beat it for this year. So it's not like they're going to show some excellent numbers or excellent growth or anything. So I'm not very excited or confident about this business. Interesting that, we've got 3 of these battery companies now back to back. It's also fairly large size. So for me personally, I'm not going to apply for this IPO. If there's some more information that comes in the next interview, I'll see if I change my mind. But as of now, I will be avoiding this.
Same view, but it's just that the segment in itself, the industry in itself is evolving very fast. And there are a lot of companies, as you said, which are suddenly coming on me, hitting the IPOs for this. So maybe this is a good segment to keep in mind because there will be a structural shift. So lithium ion batteries market would essentially do well. So it's a good market to keep track of and basis that take a informed call in the future when any of these companies starts becoming available pretty cheap. And again, you are sure of the execution of these companies, CLN Energy, Maxvolt, this one, and then I'm assuming there will be a few more future plays as well which will be coming in, and then some companies will also come in on the main board side. But yeah, that is what our view was of ATC Industries. Maybe with that we'll quickly move forward and talk about one last company, which is Shri Ahimsa Naturals. Very different segment. Me and Rohit spoke about this at depth, just trying to understand the very high level PAT margins in this business, and why was the business in itself reducing over time, because we saw that happening. But yeah, just setting up the company, it extracts and manufactures caffeine, green coffee bean extracts, and crude caffeine, and also trades other herbal extracts. Its products find its application in food and beverage, nutraceuticals, cosmetics, etc. It's a 73 crore IPO, out of which 50 crores is a fresh issue and 23 crores is a OFS. The company is coming at a market cap of 277 crores. So like 25-26% dilution. In terms of FY24 financials, they did a revenue of like 80 crores top line, 20 crores bottom line. So coming at like 14p FY24. FY25 doesn't seem to be going very different. But interestingly, FY23, I think they did like 40 CR or something like that. So a huge uh, bottom line in the past. In terms of the LM is Sujin Alpha Capital. Seems like a completely new player, but yeah. What do you, Tanmay, to very quickly discuss about Shri Ahimsa Naturals before we wrap today's episode?
Okay, so Shri Ahimsa Naturals Limited is a Jaipur-based manufacturer of caffeine, natural caffeine, green coffee bean extracts, and crude caffeine. Okay, and it also does some trading of herbal extracts. Its products are majorly used in food and beverages, nutraceuticals, cosmetics, and pharmaceuticals. Okay, natural extract coffee beans are extracted by the company from the seeds of tea and coffee, and this its products are majorly used in your energy drinks, soft drinks, cosmetics, and pharmaceutical products. Okay, so one thing I saw in this scheme the second और एक product है in which green coffee bean is also extracted from your unroasted green coffee seeds, okay, which are also used in your weight loss products. And one thing to note here is कि whatever raw material they need is completely imported, okay, so that can be risk in it. Okay, so and its revenue is like 90 to 95% exports ही करते हैं, okay, to USA, Germany, South Korea, UK, Thailand. The IPO size is like 73.8 crores, 50 crores is fresh, and 23.8 is an OFS. Out of 50, 35 crores they are doing a capex in for a new plant in Jaipur, which is expected to get commercialized after 2 years, like FY 26-27 में ये आएगा. Okay, I'll tell you how much capacity they will be expanding post, but there's some interesting point in it, so I'll be doing that at a later point. And so see, the company has also given the expected utilization. Okay, so they're expecting here 40% capacity will be utilized in FY 27. Okay, so if I see one thing is कि इनका capacity utilization has been falling like anything. Okay, FY 23 the capacity utilization was like 81.5%. In FY 24 it fallen drastically to 57.8%. H1 में तो 47% है. But one thing to notice, like this business is also your 40-60% or 45-55 kind of a business. So H2 थोड़ा सा inclined रहेगा ये. If I come on the financials, in FY 23 the company did a top line of 106 crores and a PAT was like 38 crores. Okay, so it's very rare to see some what we can say a commodity business doing such a kind of like 35% PAT margins is rare. But in FY 24 the revenue came down by 21% to 78.7 crores and PAT fall by 51% to 18.7 crores. And the EBITDA margin also sharply fallen by 50% to 35%. H1 mein they did like 41 crores top line and 9.7 crore bottom line. The IPO is priced at like 277 to 78 crores ka market cap. On FY24 it's like 14.8 times. On FY25 TTM basis it's like 14.3 times. And if I just do it at 40-45% and H2 at 50-55%, 55 to 60%, तो एक roughly पकड़ लो 13 के multiple पे आ रहा है. Okay, and if I just use the industry standards and the natural what we can say the revenue historical revenue, then like पकड़ लो ये साल 100 crore के आसपास का top line रहना चाहिए, like 20-22% crore का bottom line. Okay, now one thing here is its capacity is currently at 270 metric tons per annum for natural caffeine, and for green coffee it's like 200 mtpa. Okay, but the new plant will increase its capacity by 700 mtpa for natural caffeine. मतलब 270 पहले था, उस पे 700 बढ़ेगा. ओके, एंड जो ग्रीन कॉफी था वो 200 पे और 300 बढ़ेगा. मतलब दिस कंपनी विल ऑलमोस्ट लाइक 3 times its capacity if I just combine both of its sub segments. But here one thing I already told you is कि इनका utilization पहले से 50% के आसपास है, जो 45%, 50%, 55% is a bit low. और उसके ऊपर भी ये इतना सारा कैपेक्स कर रहे हैं, सो वी डोंट नो कि ये वो जो कॉस्ट रहेगी ऑफ इन्वेस्टिंग इन द बिजनेस एंड द डेप्रिसिएशन कॉस्ट, और थोड़ा आई फील वर्किंग कैपिटल भी लगेगा उनको इवेंचुअली. सो द मार्जिन्स माइट टेक अ हिट इफ द कैपेसिटी इजंट यूटिलाइज्ड इन दैट मैनर. ओके, one more risk I saw is कि there is some qualification from its auditors. Okay, कुछ एक 70 लाख का qualification है, कुछ 40-50 लाख का है. Okay, and one more risk is like your 43.5% revenue comes from your resellers. Okay, मतलब you know कि resellers are always very volatile and you don't know कि कब उनका revenue कम हो जाए, कब ज्यादा हो जाए. So that's a risk, and it's 66% revenues come from a single customer. Okay, and in its whole RSP they haven't mentioned its clients. Okay, so I could not get who are its clients, but what I saw is कि इनका Thailand side पे थोड़ा inclined है and USA. So I feel कि its client can be like someone like Nestle. Okay, because you know कि its products are used in those what we can say high segment soft drinks beverages. And Thailand में भी दिख रहा है, and Thailand you know the major player is Nestle on in this segment. So I'm assuming, I can be 100% wrong, it's just my assumption. LM is your Srujan Alpha, who has, I won't say that great track record. Its last 2 IPOs were Nexus Petro and Popular Foundations. Nexus was I guess it like opened at both Nexus opened at like slight premium and Popular was at par, and board didn't do well and much post listing. But they are holding their prices, so I would say decentish kind of um, and decentish kind of an VRLM. Okay, so what I feel in the company is like valuations at are at par. Like if you see this is a value added segment, and end of the day it's a commodity product. But like I heard from somewhere that they are like largest in India and I guess fourth largest globally. This company, but it's not mentioned in the RHP, so that cannot be a data point. Okay, but like I feel कि decentish kind of an IPO है, but one more major risk the industry. Okay, कि लास्ट ईयर इनके रेवेन्यूज क्यों गिरे थे द मेजर रीजन was the fall in the coffee prices. Okay, that so their overall revenues and the sales quotations are based on the raw material of the coffee beans. Okay, and that had taken a hit, but अभी थोड़ा सा उसमें rebound आ रहा है. So you would see कि volumes might grow or not, we are not very sure, but value terms में those will grow. So the major risk is your supplier, and your supplier is also a major risk. Okay, इनका 75% जो raw material है that is from a single supplier. Okay, and that is ऐसे चीजों में थोड़ा सा markets is very hesitant to give some what we can say good valuations. Okay, so overall decent kind of issue there. The litigation side पे company के against कुछ नहीं, but like there are 1-2 cases against the promoters, but those are not very what we can say large in nature. Just promoters have filed some cases against some another entities, but that is quite irrelevant. Okay, so decent kind of an IPO है. Valuations I would say कि 10-20% और सस्ते रहते तो शायद इसमें बहुत ज्यादा इंटरेस्ट बनता. एंड एक हाई सेगमेंट हाई वैल्यू सेगमेंट का कमोडिटी बिजनेस है. थोड़ा सा नीच सेगमेंट है. आई गेस इट्स अ फर्स्ट लिस्टिंग इन दिस स्पेस. इवन इन द मेन बोर्ड ऐसा कोई कंपनी है ही नहीं लिस्टेड. ओके, थोड़ा यूनिक काइंड ऑफ अ कंपनी है. सो इसको कितना वैल्यूएशन मिलेगा, व्हाट शुड बी एन आइडियल मल्टीपल, इट्स वेरी टफ टू जज. सो आई फील कि यार इसमें ना it's not very easy to judge ki how much it can get listed, how can be its long term kind of a prospect. But what I personally feel is ki I don't feel a niche list hoga. I'm not, I would say, quite very very bullish on this company, but खराब भी नहीं है company. Like you can say like it's a 6 of 10 kind of a company. So some risk takers can take a bet on it कि यार थोड़ा सा एक listing pop, but as we are not sure कि इसका कैपेसिटी यूटिलाइजेशन गोइंग फॉरवर्ड कैसा रहेगा, हाउ द कॉफी प्राइसेस विल गो इन, और ये सप्लायर का एंड आपका क्लाइंट्स का कैसे वो रेवेन्यू कंसंट्रेशन एंड सप्लायर कंसंट्रेशन कम करेंगे. नो मेजर इंटरव्यूज अवेलेबल. सो I'm a bit skeptical on that part. So for long term, I would not suggest because we don't have enough, like we have more questions than the answers. So matlab, this is like average kind of an IPO. Those people have a good risk appetite, can think of applying, and rest should ideally avoid. And there was also pre-IPO done in this company, because I'll tell you the names in 1 minute. I'm yet to see those names.
While Tanmay speaks about the pre-IPO investors, I also felt pretty similar. Like wasn't a lot of information available. The degrowth was concerning, but again, it's available cheap, especially if you think that the company is doing capex because of a reason. They have something which you don't understand. So again, I feel इसमें information उतनी available नहीं है, so it can go in any direction. But and like if someone's very patient, it can be a good bet in the long term. In the short term, I'm not sure. I'll not be applying for this IPO, but we'll definitely track it closely to understand how the price moves and try and understand some more information and try and gauge the plans basis the price movement to be able to make a call. But again, so many IPOs come that you kind of forget. So this is interesting in that way. That is what my overview was. But over to you, back to you, Tanmay.
Okay, sir. So the pre-IPO has been done like close to 60 people. Okay, बहुत सारे नाम हैं. Majority seems to be individuals and like family friends. अगर ऐसा ही सारे लोग दिख रहे हैं. The largest pre-IPO is done by some like research and properties LLP. I tried to get the names, but it's like it is looking like Pramila Bafna and some. So I don't know who these people are. But there is a second name which is quite interesting, which is your Manoj Agrawal. Okay, the same person who was in sale energy also. But the quantity is like 50 lakhs, 60 lakhs kind of. So we are not sure कि how will the market react on that. Uh, but मतलब pre-IPO हुआ है इसमें and this is one interesting name. But ऐसा बाकी ऐसा कोई बड़ा नाम नहीं है.
Got it. With that, maybe we have covered almost all the companies. Just want to highlight again, if you haven't joined the YouTube channel, ऊपर link है pinned comments में, so definitely join the YouTube channel. And second thing, we will see how the space evolves. If there are more IPOs, if we feel that it's those will have enough subscription for the market, and then hence we need to think about whether like there are more questions. We'll definitely do this more, but again, it's a still evolving work. We hope that the markets have some continue to have some rebound from all the fall that we have had. I hope we have a good next week, and then basis that we'll take our call further. But yeah, that's pretty much it from my side. Any closing remarks from Tanmay and from Rohit?
Closing marks इतने ही है कि I'll be applying Desco Infratech full force.
Yeah, I will also be applying Desco. I will apply for Grand Continent. I think those are the two. This Ahimsa one, I'll just wait to see the anchor book ones. But yeah, some red flags. Plus, there isn't enough information from the promoters themselves. Always makes it a little risky. I think there was one more IPO which is closing this week, which we have not covered, which we won't be covering either. Identics Web. So just letting people know that there is still one more. You guys can study that.
It was
We
a
won't.
very, very small IPO. I think like
I
20
think it
CR
is
IPO for
Beeline.
Beeline, right?
Yeah, I
Yeah.
think Beeline. Yeah, which normally brings decent companies only. But yeah, not now. There's no guarantee of that. Also, I've seen some very questionable listings and questionable companies. But yeah, that also is there for people who are tracking closely.
Got it. Yeah, with that, we'll kind of end today's space and let everyone watch last 5 hours of IPL of CSK trying to chase whatever MI made. We will hopefully see you again next week. This was a good episode. I will try and put it up on YouTube as well. Uh, I hope markets give everyone a chance to celebrate next week. With that, we'll end today's episode. Thank you so much, everyone.
Thanks, everyone.